All right, good day. Hope that you're doing well. So in this video, we're going to be looking into an exam question that has to do with your statement of financial position, which is also known as your balance sheet, as well as notes, right? So we're going to be doing this question from a past paper. And then in this question, what is it exactly that we require to do? We're required to prepare the trade and other receivables note. We are also required to prepare the trade and other payables note. And lastly, we're going to be preparing the balance sheet. Okay, now below I've also included the answer sheet, which is where we're going to do our working. So let me just quickly erase here, right? So the first note that we're going to go about preparing is the trade and other receivables note. Now remember, what are the line items that goes into this note? So first we have trade debtors. What exactly is trade debtors? This is your debtors control, taking into consideration any adjustments that have to do with debtors, right? So in other words, this is your adjusted debtors control balance, right? So it's your debtors control taking into consideration any adjustment that has to do with debtors. Now, we have trade debtors, and always from this, we need to minus provision for bad debts. Provision for bad debts, right? So it's trade debtors less provision for bad debts. What is it that we're going to get? We're going to get our net trade debtors, all right? Now, what are the other line items that we need to include in our trade and other receivables note? So the first one being accrued income. Now, what exactly is accrued income? So let me just reduce the size of this. Accrued income, it is that income that we didn't receive in full, right? Accrued simply means that it's not paid in full, right? So, for example, we were supposed to receive rent up until December, but we only received rent up until November, right? The rent for December is accrued, right? So, accrued income in simple terms, this is the income that we didn't receive in full. Now, what other line items do we need to include here? We also need to include prepaid expenses. Now, what are prepaid expenses? Prepaid expenses are those expenses in which you have paid extra. For example, your water and electricity bill is 700, but for whatever reason you paid 800 rands, right? The difference between the two, which is 100 rands, it is prepaid. You paid extra 100 rands, right? So in simple terms, prepaid expense, these are expenses in which you have paid extra, and as a result, they would need to refund you back that amount that you paid extra. Hence, you include them under your trade and other receivables. Accrued income, this is the income that you didn't receive fully. As a result, you are entitled to receive that income. Hence, you're going to include it under your trade and other receivables, right? So let us go and identify each of these line items. So starting off with the first one, we're going to start with our trade debtors. And remember, I said trade debtors, this is your debtors control, taking into consideration any adjustments that have to do with debtors, right? So let me go on the information that I'm given here. So my debtors control balance, here is it. It's given as 73,600, right? Now let me see if I have any adjustments that has to do with debtors, those people who owe me money, all right? Now the first one is commission, telephone, insurance. So let me go here. Transaction number 4. So transaction number 4 says an EFT made to a creditor for 1.8. So EFT made to a creditor, right, in settlement of our account of 2000 was incorrectly posted in the debit side of the debtors control. Now, the applicable discount has been correctly recorded. Now, let me just quickly analyze this, right? So let me draw my two accounts here. My debtors control, which always increases on the debit side and decreases on the credit side. And let me also draw my creditors control. So always whenever you have these type of questions, this is what they expect you to do, right? Or rather you could do this and it would guide you with regards to what to do. So this account always increases on the credit side and decreases on the debit side. Now here, what is it that we did? An EFT, this EFT was supposed to be relating to a creditor, right? Was incorrectly posted in the debit side of the debtors control account, right? So this is important. Incorrectly posted to the debit side of the debtors control account. Now, let me do the incorrect thing. So basically that EFT, they recorded it here on the debit side, right? And this was a payment to a creditor, right? It simply means that this was supposed to be recorded in the creditor's control. not the debtors control. Now let us correct that mistake. So in order to correct that, we need to cancel this out. So we're going to cancel it out on the credit side. So I'm going to write balance carried down 1,800. As a result, these two balances would cancel out, you see. Now, this EFT is a payment made to a creditor. Remember, when you pay a creditor, you're basically reducing the amount you owe to them. Hence, that transaction would be recognized on the debit side of your creditor's control, right? So that payment was supposed to be on the debit side of the creditor's control. So this is the correct entry, basically, of the 1.8. Now, these type of transactions would always affect your debtor's control as well as your creditor's control. But remember here, what is it that we're interested in? We are interested in the debtor's control, right? So here, let us look at the change we made. The change we made is the one I wrote in red. And as you can see, the change is on the credit side. And the credit side is a minus, right? So as a result, I would need to minus this 1.8 on my debtor's control balance, right? So here I'm going to minus 1.8. Now, let's do the same for our creditors control, right? So let me first start by recognizing my creditors control balance, which is for trade and other payables, 42,700. Now, let us look at the ledger account we prepared here. Now, as you can see, this transaction is on the debit side of your creditors control, and the debit side is a minus, right? Meaning that we need to do what? We need to minus the 1.8 on our creditors control also. All right. So as mentioned, these type of transactions always you would need to do these ledger accounts that would serve as a guidance with regards to what to do, right? So now, based on this, that is the only transaction that is to do with debtors. Now, my trade debtors, let me just simply punch this amount in my calculator, 73,600 minus 1.8. This would be 71,800. And remember, we need to minus provision for bad debts, right? So provision for bad debts, it's given as 2,900 minus 2,900. And as a result, I'm going to get my net trade debtors, and my net trade debtors in this instance would be equals to 68,900. Now, accrued income and prepaid expenses. Now, with regards to accrued income as well as prepaid expenses, first I'm going to start by looking at the information on A to see if I'm given the balances with regards to those. So from this table, I can see that I only have, okay, income received in advance balance, prepaid expense. Okay, prepaid expense is a balance of 1,980. So let me write that here, 1,980. Accrued income, it doesn't have a balance. So after you looked at your balances, right, after you've looked at your balances, now you can go to your adjustments. Now remember, what exactly is accrued income? So we're starting off with accrued income. This is the income that you didn't receive fully, right? So if you could look into transaction one, commission income due to the business is 12,000. Remember, this amount can only be due if it wasn't paid fully, right? So you were supposed to receive commission income of 12,000 and we didn't receive it. It is due to us. It is accrued to us. So as a result, this 12,000 would be my accrued income, right? So accrued income would be 12,000. But before, let me just see if there's any other transaction that has to do with income being accrued from here. So let me just do this. So it's telephone. Okay, that is the only transaction that has to do with accrued income. Now, prepaid expenses. What exactly is a prepaid expense? Remember, these are expenses that we paid extra, right? So here, let me see. Transaction 3. Mr. Sam or Knekas paid 14,560 at the end of February, right? This was insurance premium for the months of February as well as March. Now remember, when exactly is our year end? Our year end is on 28th February, and we paid the insurance for February as well as March, right? So do you agree that the amount for March, it is extra because it doesn't relate to this financial year, right? So the insurance paid for months, it's prepaid, right? And as a result, I'm just simply going to take the 14,560 because it's for these 2 months. I'm going to divide it by 2, right? 14,560 divided by 2, I'm going to get 7,280 per month. This is how much we were paying, right? And as mentioned, The amount that relates to March would be prepaid, right? 7,280. Now, 7,280 added to that balance of 1,980 that was given, my total prepaid expense would be equals to 9,260. All right, and these are all the line items that goes into this trade and other receivables account. Now, what's left for us is to balance this account. So here, what is it that I'm going to take? I'm going to take my net trade debtors. I'm going to add my accrued income. I'm going to add my prepaid expense to get my trade and other receivables balance at the end, right? So 9,260 plus 12,000 plus my net trade debtors of 68,900. This would be equals to 90,160. All right. And this is your balance at the end for your trade and other receivables. Let me just use a visible marker here. All right. Now, let us move on to trade and other payables. We are done with trade and other receivables. Now, with regards to trade and other payables, remember we have trade creditors. What exactly is your trade creditors? This is your creditors control, taking into consideration any adjustments that has to do with creditors. Remember, creditors are those people you owe money, right? So it's your creditors control, taking into consideration any adjustments that have to do with creditors. Now, what else do we include in this trade and other payables account? We have your income received in advance. Now, what exactly is income received in advance? Right? This is the extra income you received. For example, you were supposed to receive 10,000 for rent, but instead they gave you 12,000. That extra 2,000 is income received in advance, and you would need to pay it back. Hence, you include it in your trade and other payables, right? So you have income received in advance as well as accrued expenses. Now, remember, what exactly is accrued? Accrued is not paid in full, right? Remember, before we had accrued income. I said, this is income you didn't receive in full. Accrued expenses, these are expenses that you didn't pay fully, right? For you were supposed to receive, for example, you were supposed to pay uh, water and electricity for the period of 1 January up until December, but then you only paid up until November, right? Meaning that that month that you omitted for December, it is accrued, right? So in simple terms, accrued expenses, these are expenses that you didn't pay fully, all right? So these are the main two that would need to be included. And most of the time, 90% of the time, there would be a transaction that has to do with salaries and wages, right? That you would need to include in your trade and other payables. But then we're going to get to that when you're going to see that on these adjustments that we have right over here. But for now, let us focus on these three line items that we have. Remember here, we already took into consideration the 1.8 based on these transactions here, these ledger accounts that we did here, right? So based on this information, let me see if I have any transaction that has to do with creditors, which are those people I owe money, right? So I can see this is salaries. As mentioned, you're gonna have a transaction that has to do with salaries and wages, but we're gonna get to that in a second. So okay, based on this information, there isn't a transaction that has to do with creditors. So to find my trade creditors, simply take the 42,700 minus the 1.8, and I'm gonna get 40,900. Now, with regards to income received in advance, as well as accrued expenses, before I look into the additional information, first let me see if I'm given any balances with regards to these two accounts. Starting off with your income received in advance, I have a balance of 13,650. And for accrued expenses, let me see if I have any balance that I'm given here. I don't have any balance for accrued expenses. Now, let me go to the additional information. I'm going to start off with income received in advance to see if I have any income that I received extra, right? So let me quickly raise here. So, okay, the second transaction. So remember this first one, we already did it. We also did this one. Now the second one, this is the telephone account that wasn't paid. So this has to do with accrued expenses. And yes, basically we don't have any transaction that has to do with income that we received extra. So as a result, My income received in advance would be cost to 13,650, which is the balance that I was given. Now, accrued expenses, remember these are expenses that you didn't pay full. Now, if we look at transaction number two, a telephone account for February was received but has not been paid. Now, what does this mean? It means that we received a statement which shows us how much do we owe for telephone account for the month of February, but we didn't pay that amount, right? So when they say a telephone account for February 2022 was received, it simply means that we received a statement or some form of communication which informs us that this is how much your telephone bill for this month is, right? And we didn't pay that amount. So that amount that we didn't pay for telephone, it is accrued, right? It's an accrued expense and we need to include it. So this is 1.3, right? And we're done with this transaction. Now, let us go here. Transaction number five. Now, the following totals for February salaries journals when it posted. Now, this simply means that these relate to February salaries and they were not posted, right? So what is it that is exactly happening here? So these salaries they relate to February, right? And if they were not posted, they are payable, right? So we need to include them in our trade and other payables. What exactly are we going to include in our trade and other payables? So let me quickly raise here. What exactly are we going to include in our trade and other payables, right? We still need to pay these February salaries, right? This still needs to be paid. Now, what exactly are we going to include in our trade and other payables? We're going to start by including, so the manner in which you're going to approach this, remember on your income statement, right? You would have said gross income plus any contributions by the owner or the employer, contributions by the employer. Right? Under your salaries and wages, you would have added the gross income plus contributions by the employer. This is on your income statement. Now, on your note goes in detail, right? And what is it that we need to include in our trade and other payables note? So it will be the net salary. We're gonna include contributions. So let me just do this. We're gonna include deductions, and those deductions added to contributions by the owner. So on your note, your trade and other payables, you're gonna include your net salary and you're gonna write creditors for salaries and you're gonna include deductions as well as contributions by the owner, right? Because remember these deductions that you make, so basically on the gross salary there would be deductions such as UIF, pension funds, right? These deductions are made by you, the employer, and as a result you would need to pay it over, or you need to pay over those deductions to third parties, right? For example, when you deduct medical aid, right? Let's say you have one of your employees, right? And then as a result, it's compulsory for them to have a medical aid. When you deduct that amount on their salary, right, their gross salary, that amount you want, it's not for yourself, right? You need to pay it over to the relevant medical aid that they are using, right? For example, you need to pay it over Discovery. So now, in a nutshell, you include your net salary, deductions, plus contributions by the employer, right? Now, let us look into the information that we have here. So this relates to February salaries. And here I can see that my net salary is 37,520. So I'm going to include that. And I'm going to write creditors for salaries. And the net salary was 37,520. Remember, this is how much the employee is gonna get, right? The employee is gonna get the net salary, right? That's the amount that is payable to him. Now, what about the deductions? So we have medical aid deduction. So let me start off with that one first. So let me write the names of the deductions. I have medical aid, right? So I have medical aid, I have pension fund, I have payee. So let me start with those. Medical aid, I have pension fund, payee. What are the others that I'm omitting? I have UIF, Now remember here, I said, what is it that you're going to add exactly here? Let me just go back here. It's your deductions plus any contributions by the employer, right? So let us start off with the medical aid. Medical aid deduction is 2.3. Do we have any contributions towards medical aid by the employer? Yes. 2.6 medical aid contributions. You want to add these two amounts, right? So it's 2,300 plus 2.6, all right? Pension fund, we also going to do the same, right? So let me quickly raise here. So for pension fund, so this is my deductions. Do we have any contributions towards pension fund? Nope. The only contributions we have is medical aid and UIF, right? So pension fund, I'm going to write the 1.7 as it is. Same applies to payee. We don't have any contributions. So my payee, 6,000. I'm going to write the amount as it is. Now, UIF, yes, UIF, we have a contribution, 480, and my UIF deduction is also 480. So basically 480 times 2. So for UIF, it's 480, which is my deductions, 480, which is my contribution, right? So 480 multiplied by 2, that's 960. And lastly, let me add the medical aid amount, 2.3 plus 2.6. This would be equals to 4,900. All right, and this is my complete trade and other payables note. Now, let me just add all these total amounts. So 40,900 plus 13,650 plus 1,300 plus 37,520 plus 4,900 plus 1.7 plus 6,000 plus 960. This would be equals to 106, 930. All right. Now, let us do the final section, which is the balance sheet. All right. Now, with regards to balance sheet, you need to know the format of your balance sheet. This is important. You need to know the line items that goes under your non-current assets, your current assets. You need to know the line items that goes under your equity, your liabilities, right? If you know the format, right? Because most of the marks under the balance sheet, you're gonna get them from knowing the format of your balance sheet. Now, for example, under our current assets, we have only three line items. We have your inventory or your trading stock. We also have your trade and other receivables as well as cash and cash equivalents, right? So now I have inventory, I have trade and other receivables, right? And cash equivalents is already given. Now, with regards to trade and other receivables, we already prepared a note for that. And this is our balance for trade and other receivables that we got, 90,160, right? So I'm going to write that here, right? For the mere fact that you took a balance from your note, and you're going to put it here, you're going to get a mark for that, even though let's say that amount is wrong, right? So we also going to do the same for trade and other payables. Remember, trade and other payables, this is the balance we got, 106,930. And trade and other payables goes under our current liabilities. So current liabilities, we have trade and other payables. Now my trade and other payables is 106,930. Right. So here, let me start off with the top part, right? Let me finish this off. So non-current assets, I have fixed tangible asset and I have fixed deposit. Now let me see if I have any information that relates to fixed deposit here. Now, if you could look here, this is a question mark, meaning that my fixed deposit is a balancing figure, right? Because of this question mark, I know that this is going to be a balancing figure. So this is going to be the last thing that I'm going to uh, go about preparing, because how would I get the balance for my fixed deposit? I'm going to get it using the totals on this balance sheet, right? It's a balancing figure. Now, what about inventory? Am I given any information that has to do with inventory here? So you can see this is load, these are the adjustments we made. So there is no transaction that has to do with inventory, right, or any information. Now, if that's the case, it's simply means that you would need to use your ratios, your financial indicators, right? So if for this example, we're not given anything that has to do with inventory. How would we determine this inventory balance? Do you agree that if you can get the current assets balance, you can be able to determine how much would inventory be? Because remember, this current asset would be inventory plus trade and other receivables plus cash and cash equivalents. And how would you exactly find this current asset balance? You're gonna use your financial indicators. To be precise, the current ratio. Remember, you need to know the formulas for this. What exactly is your current ratio? Current assets divided by current liabilities. We're going to get our current ratio of 1,5, right? So to get this current assets, we need to first find what is exactly the total for our current liabilities, right? But then we're going to get to that, right? So let us look at the others, right? So firstly, I'm trying to write down the information that I'm given, right? So that is my first focus, writing down what I'm given and doing the calculations afterwards. So now moving on to owner's equity. I have my capital balance, which is 600,000. Current accounts. Am I given any information that has to do with current account or any balance? So let me look here. As you can see, there isn't any information that is to do with our current accounts, meaning that how would we find that current account balance? We're going to use ratios, financial indicators. And what ratio exactly are we going to use now? Debt to equity. Now, this is just a tip. Every time, whenever they give you a line item and then they don't give you any information with regards to that line item, it simply means that you need to use your financial indicators that you're given. Now, remember what exactly is the debt to equity ratio? You need to know the formulas. Your non current liabilities divided by your total equity, right? Your shareholders' equity. And you're going to get 0,5. So, do you agree here? If I can get the owner's equity balance, we would be able to get the current account amount, right? Because why? This owner's equity is your capital plus current account. We already have our capital balance. And how would you find this owner's equity? This is basically your owner's equity line item here, shareholders' equity. It's exactly the same as your owner's equity, right? So we're gonna use ratios to calculate that amount, right? And we're gonna get to that. As mentioned, first I need to try and write down what I'm given before I can get to calculations, right? So here we would need our non-current liabilities balance in order for us to find our owner's equity balance, right? So let me just write this as owner's equity instead of shareholders equity, but they're basically the same thing. So owner's equity. Now, non-current liabilities, I think I saw something with regards to that. Loan, right? The loan statement. So we have a loan. And with regards to loan, if you could look at the information that we have here. So let me just erase here on the side. Now, with regards to loan, can you see we're given balance at the beginning as well as balance at the end? Whenever you are given your balance at the end, what is it that you need to do in order to calculate your correct loan amount? You just simply need to take your balance at the end minus the short-term portion of loan. What exactly is the short-term portion of loan? This is the amount that you're going to pay next year, right? This is amount you're going to pay next year. So you need to just take your balance at the end minus your short-term portion of loan. What exactly is your short-term portion of loan? The amount that you're going to pay next year, right? So let us analyze this information. My balance at the end here, I am given as 1,100,550. And as you can see, the loan, bullet point number 4, the loan would be reduced by 55,000 in the next financial year. Your loan can only reduce if you pay it, right? So here, basically, they're giving us this, they're indirectly telling us that the amount that we're gonna pay next year, it's gonna be 55,000, right? And this would be your short-term portion of loan. Now, why are we exactly minusing this amount? Remember, non-current liabilities are those amounts that are payable for more than 12 months. Now, if something we're going to pay it next year, it means that we're going to pay it within 12 months. As a result, it's no longer a non-current liability, but it's now a current liability. So hence this short-term portion of loan, we would always transfer it under our current liabilities, right? So this amount that we're going to subtract here, we're going to transfer it to current liabilities. Right. So, but let's start here. I have this minus that. So 1,100,000. So let me just punch that into my calculator. So let me write here my loan, 550 minus 55,000. We're gonna get 1,045,550. All right. And this would be your non-current liabilities balance as well. Right. Now we have our non-current liabilities. And remember, I said this amount, right, that you're going to pay next year, you need to transfer it to your current liabilities, right? And here you're going to say short-term portion of loan, and that short-term portion of loan amount, it's your 55,000. All right. Now, based on this, we don't have any additional information that we need to recognize on this balance sheet, right? So now we can go over to calculate those balances, right? So basically now my current liabilities consist of only these two things. Let me just quickly add them. So it's 106,930 plus the 55,000, and this is going to be 161,930, right? That's my non-current liabilities balance. Now, remember there are certain balances that we need to go about calculating them, right? So starting off, let's start off with that one, the fixed deposit one. Remember I said with regards to the fixed deposit one, if you can calculate our current assets, right? Not really the fixed deposit one, this one basically, the inventory balance. I said if you can get the current asset balance, we would be able to get how much it's inventory. Now remember, I said for our current assets, we need to take current asset, divide them by current liability. So my current assets, which is what I'm trying to solve for, my current liabilities balance is 161,930, right? And I said this is be equal to 1 comma 5. Now I need to solve for x. And what is x? X is my current assets balance, right? So solving for x, I'm going to multiply both sides by this 161,930, multiply both sides so that these two could cancel out. So 161,930. And as a result, my x, which is my current asset, is going to be equal to 1 comma 5 multiplied by 161,930, and this is 242,895. This is my current assets balance. So let me write this as 242,895. And now, as mentioned, because we have our current assets balance, we can now determine how much should inventory be, right? Because remember, inventory plus trade and other receivables plus cash and cash equivalents, you're gonna get your current assets balance. So I'm just gonna take the 242,895 minus 90,160 minus the 68,000. And as a result, my inventory balance would be equals to 84,735, right? Now we're done with the inventory balance. Now let's go down. There was another balance that we needed to determine, which is our current account balance. Remember, I said if you can get this owner's equity balance, we can be able to get how much our current account is, right? Because remember, capital plus current account is going to give me my owner's equity. And remember the formula here, I said it is our non-current liabilities. Now, what is my non-current liability balance? It is this amount here, right? So it's my non-current liabilities, 1,045,550. And these calculations, you always do them on your answer sheet, not your question paper, right? So it's our non-current liabilities. So I'm just confirming if this amount is correct, right? Over owner's equity, right, which is what I'm trying to solve for, and this is equals to 0.5. Now let's solve for x. So firstly, I'm going to get rid of my denominator by multiplying both sides by x. And after, I have 0.45550 multi, it's equals to 0.5 x. I'm going to divide both sides by 0.5. So basically my x is equals to 1,045,550 divided by 0.5. And as a result, this would be equals to 2,091,100. Right? This is my owner's equity balance. So it's 2,091,100. All right. And remember, now I can just take that amount and minus 600,000, and I'm going to get how much is my current accounts. So my current account would be 2 million. So let me just confirm. Wait, I think I've made a mistake. Let me just recalculate. So it's 2,091,100 minus 600,000. So as a result, yes, it has to be 1,491,100. All right. Now, is there anything else that we need to calculate here? Now, let me see. So at the top, remember, a fixed deposit is a balancing figure, meaning that we're going to use this table to find our fixed deposit, right? So with that being said, if I can find my total assets, so let me just underline them. So if I can find how much is actually my total assets, remember total asset consists of your current assets plus your non-current assets, right? So if I would find how much is my total assets, I would be able to find how much is my total non-current assets. And as a result, if I have my total non-current assets, I can find how much is exactly fixed deposit. Now, how would I find my total assets? Remember, your total assets should always be equals to your total equity and liabilities, always. Now, as you can see, the bottom part, there's nothing missing. So let me just simply add the totals. Total equity and liabilities would be equal to my owner's equity plus my non-current liabilities plus my current liability, right? So my owner's equity, remember, it is the 2,091,100 plus my non-current liability, which is 1,045,550 plus my current liability balance, which is 161,930. Now let me just simply add these three amounts. And if I do so, I'm going to get 3 million. Let me just use a different marker. Right? 298, 580. Right? Let me just verify 091, 100 plus 1,045, 550 plus 161, 930. Yes, it's 3,298,580. Remember, these two needs to be exactly the same. For the mere fact that you wrote two amounts that are exactly the same here, you're going to get a mark for that. All right. Now, you have your total assets. And remember, I said your total assets consist of your current assets plus your non-current assets, right? I have my current assets. So if I could take 3,298,580 minus 242,895, I'm going to get how much is my total non-current assets, right? And my total non-current assets, let me just change this, they would be equals to 3,055,685. Right? So 3,055,685. And how would I find my fixed deposit? Right? Remember, fixed asset plus fixed deposit, they would make this total right over here. So I can just simply take the amount minus 1,840,000. And as a result, my fixed deposit would be equal to 1,215,215. 685. All right, and this would be our complete statement of financial position, which is our balance sheet. All right, and that'll be all for this video. Remember, if ever you have any questions, always feel free to reach out. Thanks.